Of course, we have seen Ant being hit with a series of new regulations in recent months. Do we have any idea what this meeting was about?
Well, it's interesting. The government clearly is watching this IPO for sure. I mean, Ant Group is a giant. It's small in name only. I mean, this is a financial services company that includes payments, lending, asset management, insurance. So they want to know and perhaps even put out the statement that, you're going to be treated as a financial holding company and subject to the regulations regarding capital and leverage similar to banks. You're not just a technology upstart, right? Now, Chinese regulators, including the securities regulator, the banking regulator, the State Administration of Foreign Exchange, which is the regulator for FX under the People's Bank of China, they did summon Jack Ma and other executives, including Ant's chairman, Eric Jing, as well as the CEO, Simon Hu, to this rare supervisory interview, is how it's being called in an announcement on Weibo, but no further details were given. But people familiar with the situation have told Bloomberg that they were told that Ant will be treated as a bank, and also that senior executives will be under increased scrutiny as well. We've known that China's been tightening rules and imposing capital demands on the financial operations of these growing conglomerates like Ant to try and curb, of course, risks to its $49 trillion financial industry. China's recovery right now from COVID is tenuous at best, so they do not want to see risks starting to surface in the financial services sector.
So what are we hearing about how demand for the IPO is shaping up?
It's going to be a barn burner by all indications. It's poised to soar. Retail, demand, institutional demand suggests a first-day pop, despite those risks that I mentioned about increased regulations in China. But this week is crazy, right? We have the U.S. election and the uncertainty there. We have COVID-19 hitting record numbers in places, including the United States. But still, this is one of the most anticipated IPOs ever, attracting at least $3 trillion in orders for the dual listing, of course, here in Hong Kong and in Shanghai. It begins trading, by the way, Thursday, if you hadn't heard, November 5th. And, as far as that institutional demand, we're hearing that institutional investors are buying shares at a 50% premium, according to people familiar with the situation. Some trades executed at 120 Hong Kong dollars each. That's $15.50 U.S. in the gray market yesterday. That's compared to, of course, the listing price at $80. On the retail side, brokers in Shanghai and Hong Kong, they've been overwhelmed by orders from those seeking just a sliver of this pie. Demand for the retail portion in Shanghai alone exceeded initial supply by more than 870 times. So I'm going to go out on a limb and say this could be a barn burner.